What's up, everyone? It's Caddy with Money Vesting. This is it. This is judgment day for the markets. Tomorrow at 2 p.m. Eastern, we're going to get the statement from the Federal Reserve, from FOMC. And 2:30 p.m. Eastern, we'll get the press conference with Jerome Powell. And we're also going to get the summary of economic projections. So SEP also coming out tomorrow with some analysis and forecasting from Fed members on what interest rates, inflation, GDP, and unemployment is going to look like over the next several years and for a longer run as well. So this is going to be your summary for everything to look for in tomorrow's meeting. In fact, I will be live. I will be sacrificing part of my sleep to be live and cover the Fed speech and the statement. So make sure that you subscribe to the channel if you haven't already and hit that notification bell so you don't miss out on when we actually go live. And the link to our Discord and Patreon is going to be down below if you're interested in joining us, of course, getting access to all the buy and sell alerts, options alerts, trade ideas, and a lot of other benefits, including private videos and lectures and tutorials and a community full of investors and traders that are focusing on fundamental technical analysis as well as macroeconomics and stocks and options as well. So links are going to be down below. So this is how traders are waiting at the moment. I found that super funny. I think we are just kind of sitting at a table politely and in patience, just waiting. Okay, what is Jerome Powell going to do? And then, of course, one of them is going to start beating the other one up. Pretty much that's what's going to happen because market direction is very much on the line with respect to what Jerome Powell has to say and what the FOMC has to do. Now, these are some of the expectations from economists going into tomorrow. So Bank of America, for example, expecting a 25 basis point hike. Barclays expecting a 25 basis point hike. Deutsche Bank also expecting a hike of 25 basis points. Goldman Sachs is expecting a pause. JP Morgan expecting a hike, Morgan Stanley expecting a hike of 25 basis points, Nomura expecting a cut of 25 basis points, and Wells Fargo expecting a pause, as well as Goldman Sachs. So very much an undecided and uncertain environment. Analysts and economists cannot come to consensus with respect to what the Federal Reserve is going to do. And before we get any further and go over the questions that I've already broken down, let me just quickly break down some of the things here. So this is going to be a meeting after 2 months, not really 2 months, on a more technical sense, but 2 months worth of inflation and unemployment. So if you take a look at the Federal Reserve's calendar, the last meeting that we had was back in January and February, so January 31st and February 1st. And since then, we have received the January inflation numbers, January unemployment numbers. We have also received February inflation numbers, February unemployment numbers. This happened back in March, earlier in March. So those are going to be 2 inflation reports and 2 unemployment reports, as well as a lot of retail sales numbers coming out, a lot of GDP estimates, and a lot of other economic indicators and data points that are sprinkled here and there. Mortgage, applications, home sales, building permits. I mean, the list goes on and on. There's been a lot of indicators between then and the meeting tomorrow, right? Between January 31st, February 1st, up until tomorrow. There's a lot of data points that the Federal Reserve needs to pretty much go over and explain to us. So in that time, you'll notice that unemployment rate has ticked up a little bit. So we were, back in January, we were at 3.4%. Since the beginning of this year, we have moved up to over 3.6%. That number came out earlier in March, of course. And if you take a look at inflation, we have been rolling over, right? So this is pretty good. We've come down to 6% from 6.4 to 6%. So it is loosening up a little bit. And core CPI has also been rolling over, not at the same pace as headline CPI. Headline CPI is coming down pretty aggressively. Core is kind of going down, but not at the same rate. So 5.7, 5.6, 5.5. So we are moving in the right direction, albeit slowly. Now, talking a little bit about the SEP. So what does this actually include? This is a summary of economic projections PDF, which will also be released at 2 p.m. Eastern. That's going to be part of the statement. Both of them are going to be released at the same time. And again, I will be live to cover it, obviously. So, first of all, we'll see what the rate hike was, whether it was 25 basis points, 50 basis points, whether it was a pause, whether it was a cut. We'll see what the Federal Reserve does there. And the summary of economic projections is really what's going to lay out what their median estimates are for interest rates, unemployment, GDP, and inflation. Those are the four things this report covers. So they are going to pretty much tell us their expectations for GDP for 2023, 2024, 2025, and they may include 2026 here because this is the first SEP for 2023 and then longer run. Unemployment rate, I'm sure it's going to tick up from 4.6%. I would not be surprised if it's a little bit over 5% going into tomorrow. And for PCE inflation, I could see that staying steady by the end of this year, median estimate, or it's possible that it gets higher a little bit moving forward. And core PCE inflation also at pretty stable numbers at 3.5, or may see it going higher a little bit. And this is going to be the key number, federal funds rate. This is the effective interest rates that the Federal Reserve actually controls. And for 2023, they guided for 5.1%. So it's going to be very interesting what number is going to be penciled in for that on 2023 and 2024, considering what the projection is going to be. Another really important thing about the SEP is going to be the dot plot. So this right here is pretty much going to be all the members and what their expectations are for interest rates. So as you can see that 2023, most members were expecting interest rates to be above 5%. Some of them were expecting above 5.5%, and then just a small minority were below 5%. But most members were expecting interest rates to be above 5% in 2023. According to the Fed Funds Futures, you can see that we are expecting a 25 basis point hike going into tomorrow, and interest rates, they are expecting to get up to 5.25%. So that is in sync with the market's expectations. However, if you come back to the SEP and take a look at where interest rates were expected to be by 2024, which is next year, the median estimate was a little over 4%. Again, you can come back up to the SEP and take a look. The 2024 number, that's the 2024 column right here, you go down 4.1%. And what is the market's pricing in? Market's pricing in for 2024 for us to come down to 3.5 to 3.75% after all these rate cuts. So there is a discrepancy, right? There is a disconnect between what the Federal Reserve has told us in their SEP, in their statements, and in their press conference with respect to what the market is pricing in. That's why it is such an important meeting. No other reason. The reason why this meeting is so important is because of that disconnect. There is a discrepancy between what the market believes the Fed is going to do and what the Fed has told us that it's going to do. So that will be cleared up tomorrow. And again, it's either going to be a rude awakening for the market, or if it's going to be a precise prediction from the market standpoint, expecting rate cuts and QE once again coming online with the banking crisis as well. So lots at stake with the Federal Reserve. Let me know in the comment section down below. What do you think the Federal Reserve is going to do in tomorrow's meeting? And these are some of the questions that are going to be our guidelines and our frameworks with respect to what I'm looking for from the dot plot and the statement and of course the speech. So rate hike, of course, that's going to be released in the statement. Rate guidance, that's going to be released in the SEP and the dot plot. Inflation expectations from both the SEP and the speech as well from Jerome Powell. Employment expectations, are they still expecting the labor market to be tight? Some weakening there, soft labor market, what conditions can we expect or are they expecting moving forward? So SEP and speech, both of that is going to include that. How to contain the banking crisis. Jerome Powell is definitely going to address that in his speech. Bank Term Funding Program, BTFP. This is a new program for the banks that are going through some liquidity issues. So what are the terms, durations, and quantities? Why are we pretty much giving these banks a bailout at face value when the market values of these assets are a lot lower? That's a big question because the Federal Reserve, would generally be absorbing all those losses under this new program. The USD swap lines with respect to other central banks, what are the terms, durations, quantities, collateral, all those things, super important. And the Fed's balance sheet, are we back to QE with the Fed's balance sheet swelling up? And the overall tone with respect to what Jerome Powell says things and, are we more leaning towards more dovish or hawkish stance? All of that is going to be super important. So that's going to be your complete update on tomorrow. Again, let me know in the comment section down below, what do you think the Federal Reserve is going to do? Hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel and then hit that notification bell so you can join and be a part of our money investing community. And of course, when we go live, you can join us during that time. As always, happy investing, and I will see you all first thing tomorrow morning for our Market Open live stream, and then again when Jerome Powell comes on board. Happy investing. I'll see you all in the next video.